there are three things that are going on now to great extremes that have not existed since the 1930 to 45 period.
Okay.
And it's important to know those three things and then to understand them well.
Okay.
The first is what is going on with money and credit when you get to something like a zero interest rate, and you need buying power. The government needs buying power, but they can't tax it, and they can't. So what we have is the production of a lot of debt that the central bank prints money and buys that debt to spend. And the last time that happened, in the last few years, it happened starting in 2008. Interest rates hit zero. They couldn't lower their interest rates. So they had to print a lot of debt, and the government went in and bought it. Okay. And we're coming to the end of a debt cycle. Okay. So this is a big thing, because where does the money come from? And who will get what? The government will now determine that, and then they'll print it and it'll devalue money. Okay, and how money flows, a big deal. So that's number one. The second one are wealth and political gaps that are causing great conflicts. Throughout history, there's always been, the main things that everybody's always fought over is money and power, particularly political power. So what we have is a situation when you have a large wealth gap and you have an economic downturn, particularly if you put a lot of debt having at the same time, you have a fight. I mean, that's been true through history. And it's reflected in the political gap. So the political gap is, it's classic political gap, left, right, okay, capitalist, socialist. How do you distribute it? How are you going to deal with that? That becomes the other, and how you fight. So that's the second of the two, this wealth political gap that's causing the conflict. And it's coming at a time where we don't have much money because we don't have a good financial position. We're printing and putting it out. So what happened, like COVID was such a good example. A lot of people and companies had falls in their income that would be ruinous. Okay, if checks didn't go out, we would have had a revolution.
Right.
And so those checks, and how do you save everything and so on? Okay, so, and it's not like the government had real money. Like they didn't have any money. They already owe a lot. So the Federal Reserve printed it, and the checks went out, which diminishes the value of money and so on and changes things. Yeah. So then the third thing is the rise of a great power to challenge an existing great power. So the rise of China to challenge the United States. In all history, there are world orders. What that means are they're the dominant power. It's like in nature almost, the big bull or something. Anyway, there's the dominant power. And then what happens is in 1945, we entered the American world order. The United States won the war. And there's a printing of a lot of currency. Clearly, it's not desirable relative to other things for private investors. However, the central bank can buy it too. And so the limit has to do with the limit of demand. And that limit of demand has to do with the central bank's purchases of that because they could buy it and hence there's no problem. So you look at periods of time of where in history, where was the most of it that has ever taken place, and to try to define the limits. And the war years was an example, or I think the most analogous period we're in now was 1930 to 1945. I'll explain the various ways that it was analogous, but more importantly, I'd like to deal with the question of the limits. And so you first had the Depression, And in that depression, and when you hit zero interest rates, you had the printing of money and the buying of financial assets. And then you had a lot of fiscal policy. So programs that produced large deficits, which then were monetized by more of that. And then you went into the war years. And the war years, very similar to now in terms of the need for a lot of money and credit, produced an enormous amount of money and credit, but it was managed by the central bank in a way where they were de facto taking that on, and it produced it was a good example of testing the limits of that.